Welcome to Financial Planning Explained, and I'm your host, Mike Menninger, Certified Financial Planner, owner and founder of Menninger Associates Financial Planning. I'm pleased to have as my guests today two of my staff. I got Kyle Ryan, Certified Financial Planner. Congratulate Kyle, who just passed his Chartered Financial Consultant exams and should be chartered as a CHFC. And also my newest hire, Nick DeVito. Nick DeVito, thank you very much for joining us. And it just so happens to be my Temple University contingent, both of which graduated Temple University with their financial planning degrees. And by the way, on a similar note, both have student loans, which is today's topic. Today is Friday, September 2nd, in case somebody sees a rerun on this, or by the time it runs that there's changes in regulations. But as we all know, about a week or so ago, President Biden signed an executive order to provide student loan forgiveness. And with the student loan forgiveness, trust me when I tell you, it was confusing in the beginning, and we seem to have ironed out certain details of it. However, there still seems to be a lot of ambiguity. So what the purpose of today is going to be is to talk about what, in fact, the government said that they're going to do with regards to the student loan forgiveness, which is actually a three-part sort of proposal. But what became noticeable is the student loan forgiveness. And then what we're going to do is, after we talk about that and some general stuff about loans, what we're going to do is kick in with questions that were asked of us. Now, what we did is, once we learned of this, we pulled together an email and sent it out to all of our clients as a bulletin to let them know and notify them, what's going on. Since then, they've responded with a lot of questions, as well as just in our research, we've seen a lot of questions on the internet. So sometimes somebody's question helps be able to explain it. So that's the purpose today, and I'm looking forward to it because this is a very timely topic and has certainly created a lot of questions. So Kyle, why don't you jump in and tell us the three pieces of it, if you will.
Yeah. So Biden came out and released a three-part plan, and on the surface, it almost seemed like it was simple. And then you kind of break it down and you see all the layers underneath, and there's a lot of complexities and a lot of unknowns still. But like Mike said, we wanted to give you guys the facts of what is known today. The plan focuses on three things. It's targeted debt relief, which is going to be the focal point of today. That's really the hot topic. And deferment, of course. The second piece is making the student loan payment system more manageable. That has to do with income-driven plans, some alterations there, as well as the public service loan forgiveness program. They've kind of extended that. And the third part, which we'll touch on, but it's not as prevalent, would be the accountability standards that the administration is putting on colleges to make them more accountable to the tuition that they're charging their students, because that's why we're here. That's why people have the student loan debt growing, and that's, the third part of their plan was to address the looming debt and the increasing cost of tuition.
Well, there's a lot of politics behind it, and we're certainly not here to get into the politics behind it. However, one thing's for certain is that there's a lot of debate right now as to whether or not this executive order that was signed by President Biden is considered to be constitutional. Some argue that this type of relief plan had to go through Congress first, as opposed to an emergency plan, which they did for COVID. And so there may be some debate as it pertains to that. And certainly what hasn't been a debate over years is the rising and rapid rising of college tuition costs. It's been out of control, and that has created a lot of problems that we are seeing in the United States as far as our economies are going, is because a lot of the students are graduating from college with such debt that it's inhibiting their ability to buy homes, because basically their student loan debt may as well be a 15 or 20-year mortgage because their payments are so high. So it's actually crippling the economy a little bit in some regard, and that's why this is becoming a topic. And I've heard before that the colleges and the universities, hey, they're going to ask for the money and they're going to get it. And as such, they're very inefficient with their use of the money, but that's a separate issue, and that's the one part that they're going to try to address. And my comment on that is good luck. We're not going to spend much time on it, but let's talk about the student loan forgiveness. And the irony of it is that we got two guys over here who have student loans, and so they're potentially benefiting it.
Yeah.
But so because of that, Nick, you were really got into it.
Yeah.
So why don't you talk about the student loan forgiveness piece?
Yeah. So the big headline, the hot topic, Kyle mentioned it, is the loan forgiveness aspect of it. So that's up to $20,000 in debt relief and that's $20,000 if you had received Pell Grants. It's $10,000 for everyone else. And the important thing to know with this is there are income limits with it. So for a single person, it has to be $125,000 or less in adjusted gross income. If you're married filing jointly, it goes up to $250,000. So it's really important to keep those limits in mind when going through this whole process, because you want to make sure you are under those limits before applying.
And as we talked before the show, they're basing it on 2020 and 2021 tax returns, not 2022.
Yeah, and it is 2021 or 2020. So if you qualified in either one of those years, you're able to apply for some forgiveness.
And for what it's worth, the reason behind it is the politics. Because if it was based on 2022 income, they wouldn't be able to do an executive order that's an emergency. Whereas if it's 2020 or 2021, it enables them to say, well, this is still a COVID issue, and therefore they can do the emergency funding type of thing.
Yeah. They also probably don't want people to play with their income and start trying to qualify for
Well, trust me, because we would be doing that with our clients, and there's no question in my mind. That's why when we found out that the 2022, I'm like, shucks, now I can't play games, because we do that all the time with the tax planning. So another comment is the Pell Grants. Because one of the things that we're going to talk about is the difference between grants and loans. And it's a misnomer when you hear Pell Grant, because a grant is when they give you the money. A loan is a loan. So by definition, a person who gets a Pell Grant is someone who's in lower income. And if they're lower income, what they're doing is they're giving the opportunity for those folks to be able to get a $20,000 relief because they're lower income, then people may have higher income. What is that limit for the Pell Grant? Do you know?
There's not a set limit per se, but there was statistics that came out that 93% of recipients under an income, an AGI, adjusted gross income of 60,000, were 93% of the recipients had income of less than 60,000.
Okay. Now, when you're talking about income, is it the income of the student or income of the parent?
So it depends on your tax filing status. So if you're a student and your claim is dependent on your parents' tax returns, it goes off their income, not yours. If you're filing single by yourself, it's based on your income.
Okay. So the kids who are still in college, that's good. And I know one of the questions that was asked was, who can get it? Can a current student get it? Or is it only graduates? Is it grad school students? Who's eligible?
Anyone with a federal loan is eligible. So that can be someone who's currently in college, that can be someone who just recently graduated, someone who graduated 20 years ago. It doesn't matter as long as it's a federal loan. And it does apply for undergrad tuition and graduate tuition.
Okay. And I believe also is the loan had to have been taken out prior to July of 2022, correct?
That's correct.
Okay, good. So you referenced federal loans. Can you give me an idea what federal loans are?
Yeah, so basically a federal loan is just money that you're loaning from the government, plain and simple. So private loans, in this particular instance, do not qualify for the forgiveness. So it's just about those federal loans. That can be Stafford loans, Parent Plus loans, Graduate Plus loans. There's a plethora of federal loans out there.
And I understand, we talked about this yesterday too, that Sallie Mae went from public to private in 2014?
2014, that's correct.
Okay, good. Anything else with regards to the loan forgiveness program that you can think off the top of your head?
Just another comment on the different types of loans. There are relatively simple in terms of the federal student loans out there. They do have their niche types of loans where that you can really get down and break them down. But just like you had mentioned, Nick, it's Stafford loans. Sometimes they're subsidized. You can have direct subsidized, direct unsubsidized loans. Subsidized are just generally better rates for you. They're income dependent. Unsubsidized loans are probably the most common form of student loan because I myself as a borrower can get them. My parents can get them if they're taking out loans on me, which begs the question, if I get forgiveness, right, I get $10,000 for forgiveness on student loans I took out on myself, can my parents get forgiveness on student loans they took out on me? And the answer is yes.
Right.
As long as you fit the income qualifications.
Right, there's a debate on that. And to clarify the subsidized versus unsubsidized loans, I always joke, what's the difference? One of them subsidized. All right, great, thanks. But the subsidized loans basically are subsidized by the federal government, so that if you take out a Stafford loan and you took it out freshman year, if it's unsubsidized, you don't have to make payments, but accrues interest while you're in school. Yep. However, a subsidized student loan means that you do not have to pay any interest until after you graduate. Which, by the way, is it true that when we had the forbearance since COVID, have all student loans been forgiven as far as accumulating interest?
Yeah, they're deferring. So they're deferring payments, they're deferring interest rates. The federal interest rate on student loans has been dropped to 0 as of the start of the pandemic when they first made those, those
okay.
actions. Yep. So it's not that they're not accruing interest, it's just the interest rate is 0 for the
Right,
period.
okay, which is basically the same thing.
Yeah.
What about the unsubsidized? Are the unsubsidized and the Parent Plus is also at a 0 loan?
So
0%?
unsubsidized, you can't really define it by that because you can have unsubsidized, I believe, correct me if I'm wrong, federal loans and unsubsidized private loans. And
Okay.
it really just depends if only federal loans got this treatment. I know, something out there is that they're working on getting private loans forgiven, but we won't go there because that's speculation.
Right, okay, good. Good, so let's take a peek at the second slide that we put together, general information about loans, because this can also throw out a couple things. So we talked about loans versus grants. Grant is basically saying, all right, we're going to give you $10,000. Whereas a loan is, we're going to give you $10,000, but you got to pay us.
Yeah,
All right.
free money versus what you pay back.
I know, and that's frustrating because I remember when my son was going to school, we were taking a look at all of the loan sheets and they're saying, well, we're going to give you a loan and we're going to give you work study and going to give you all these things. I'm like, well, that's not really giving me money. Okay, I like free money personally.
Yeah.
That's, I don't know, just me. And the interest rates, we talked about the interest rates we found is the government loans are always the lowest. And I found too in my history is that the subsidized Stafford loans are also the lowest of all of the interest rates. Now, they also have, and this question's been asked of me numerous times, I have clients saying, hey, Mike, what should I do here? They're asking me whether I should take a fixed or variable interest rate, okay? And the answer to almost every question that we have is it depends. But basically a fixed interest rate is that if your loan is going to be a 15-year loan, a fixed interest rate, they might say, all right, we're going to do 6%, done, okay? Whereas a variable interest rate may start off as a lower interest rate, but every time we hear the Fed comes out, we're going to raise interest rates by 0.75%, boom, your loan goes up by 0.75%. So that's tricky. So, it's been asked of me, should I take fixed or variable? And more recently, someone asked me when the fixed was 6 and the variable was 5, I'm like, I'd be all over the fixed because you can reasonably project that the Fed's going to raise interest rates at least another 1.5% between now and the end of the year. And this may have even been before they raised the rates 0.75% a few weeks ago. So it's tough. But then if the rates go down, then your interest rates go down. But what you'll find is early on, you're accumulating a whole boatload of interest. And that's just not good for...
It's generally dependent on the interest rate environment when you're getting the loan. The thing about fixed rates too is you can always refinance them.
Yeah.
Right. So if you get stuck with a high interest rate loan and if you get an 8% loan, 9%, and the current going rate's 6, just refinance your loans.
Yeah, I agree with you.
But the one thing I will say to that as a caveat, because it has been, especially after this was announced, private student loans, because they don't get for forgiveness, I know plenty of folks out there who refinance their public student loans, their federal student loans, went private, no forgiveness.
I know.
Yeah. So be careful, right? A
you
lot
know
of people
what?
making payments throughout all of the forbearance because they have private loans.
Right.
So.
And I believe, too, from the student loan forgiveness, and we talked about this as well, that if someone was paying their loan through COVID during forbearance and they qualify for the student loan forgiveness, that they actually get that money back.
Yeah, it all depends. Once you said that deadline of the forbearance, it began in March 2020. So if you've been making payments on federal loans since then, you may be eligible to get some of that money back. You want to contact your loan servicer about that. They'll be able to give you more information. But yeah, that's correct.
Yep. Perfect. All right, so we're up against break already. We're going to pick up right where we left off. Just stay tuned. We'll be back with you in just a few moments.
Have you saved enough for retirement? Are you financially prepared for an emergency or unexpected event? Have you thought about your financial future?
Hi, I'm Mike Menninger, founder of Menninger Associates Financial Planning. For over 20 years, we have been answering our clients' questions just like these as we develop unique and comprehensive financial plans tailored to meet their needs. When addressing your financial plan, we incorporate your entire financial picture, including taxes, estate planning, as well as investment planning and retirement planning. So call us today for a complimentary, no obligation consultation.
A unique approach to financial planning.
Welcome back to Financial Plan and Explain, and we're talking about the student loan forgiveness topic, which has been rather big over the course of the past week, ever since President Biden signed an executive order to provide a variety of different things. So we're going to pick up where we left off with just a couple other things about the student loans, and more so of not as much the forgiveness, but just talk about student loans in general, how their repayments are. You know, you can pick a regular payment program, which is a standard, you know, over 15 years or 20 years or whatever the case. We talked about fixed versus variable rates, but they have other types of programs. I think it's income-based.
Yep.
So what are they?
The income-driven repayment plan, that is, it takes a percentage of your discretionary income, which is your income after, you know, payments for housing, food, things that you simply can't live without, and it takes a percentage of that. Now, what it used to be was 10 to 20% of your discretionary income, if you are in an income-driven repayment plan, would be qualified to be made towards student loans, right? So if I was making $1,000 a month in discretionary income, $100 to $200 would be eligible, that they say you have to make this payment plan. What they're doing is they're cutting that in half. They're going to make it 5%. Now, there's a lot of different things that go on when you make the discretionary income threshold 5%. What it's going to do is, they've worked out the math, and whether or not it holds true is, if you make the federal minimum wage of $15 an hour, your discretionary income would be so low that you wouldn't actually have to make any sort of payments to your student loans.
Except for one problem. Aren't you going to be basically a reverse amortization in that your balance continues to go up because of the interest is accumulating?
And the other piece of that kind of folds into the public service loan forgiveness is, after 10 years, if you are under a certain income threshold, or if your loan balance starts out under $12,000, you will have your loan forgiven after 10 years. So if you're just making...
If you haven't made any payments in 10 years on a $12,000 loan, then you're not making very much money.
Well, that's the thing, and the focus of it is to make community college free, or to a certain extent. You know, the first 2 years of community college, if you have less than $12,000 loan there, you can get that forgiven after 10 years of making your income-driven repayment.
That's one piece, but what about the public service loan forgiveness one?
So the public service loan forgiveness, how that currently works is it applies to federal, state, and local government workers, military, and nonprofit employees, right? So nonprofit could be working for a hospital, a school, what have you.
Right.
And what that is it says that if you make 120 months or 10 years of payments, it doesn't have to be consistent. If you make 120 months of monthly payments, you can qualify for public service loan forgiveness, which, no matter how big your loan is, will forgive your loan.
I know, it's a beautiful thing. We've got a client with a couple $100,000 in loans because he's a physician.
If you're a doctor, if you're
Right.
a teacher, you know, you got these massive student loans, and, you know, you make your income-driven repayment plan payments. It has to be an income-driven repayment plan for the public student loan forgiveness program.
Okay.
And if you make your payments after 10 years, you know, it gets wiped out.
Is that only for government loans?
That is only for federal loans.
Okay.
Again, yes, for federal employees. Yeah.
Right, okay, cool. So here's what we're going to do now. We're going to pick up with Q&A. A lot of times the Q&A can spur discussion. So here we go. So the first question that we picked up, these are questions that were either asked of us or we picked them off the internet of general questions that people are asking. So what loans qualify for forgiveness? It's federal government loans,
Yeah.
right? Okay,
Yep.
we got that. Was there a specific deadline or cutoff point for forgiveness? And I think they were saying, well, that could be answered in two different ways.
Yeah, for the loan origination, it had to originate before July of 2020.
Right.
So, you know, if you're going into school this semester... 2022, sorry,
Right.
excuse me. 2022. If you're going into school this semester, your loans unfortunately will not qualify for the forgiveness. And in terms of the deadline to apply, you have till the end of the year. So we talked about that final grace period that they're offering through December 31st. So you'll have to apply for the forgiveness prior to December 31st to receive it.
Which then raises the next question, Nick. How do you apply?
So a lot of the stuff that's, as Mike brought up in the beginning of the episode, a lot of it's still up in the air and there's not 100% ironed out at this point. So as of right now, you're going to have to apply through the Department of Education website. We could see that application coming out in 4 to 8 weeks is the timeline they had presented, so once again, not final. For those that are already on an income-driven repayment plan, you might not even have to apply.
Right, because they have it.
They
have
already
your
have-
income already
yep.
because this is income driven.
Yep, exactly.
And the income repayment programs already have your income from 2020, 2021, and everything else like that. So that makes sense.
Yeah.
But boy, I'll tell you what, when it comes to free money and sign up, you'd be silly, foolish.
you don't
and
do it,
foolish.
you don't get it.
Right, exactly. I don't know how else to say. Silly and foolish
Yeah.
probably are two very soft words of saying if you don't apply by December 31st.
Yeah, and you can stay up to date with this whole process through the Department of Education's website. You can sign up to even receive emails when all this stuff goes live.
Perfect, perfect. And do current students qualify for forgiveness?
Yep, but once again, if you're claimed as a dependent, it's going to be off your parents' income.
Right, which, by the way, we touched upon this earlier,
Yep.
and we talked about this earlier as well, is that each student qualifies for up to 10 or 20, but we'll just say $10,000, and a parent will also qualify for only one loan, or up to $10,000 for one person. So it's on a per person basis, not a per student basis.
Yeah, that's how it appears right now. I mean, like we said, the details are still being ironed out, but as of right now, they're treating it on a borrower basis. So we touched on if a parent and a student each have a loan, they could both receive forgiveness.
Right,
Well,
but
let's
if one
let's even
parent has
clar-
5 kids,
Exactly.
they only
you
get
don't,
one.
You don't get $50,000 of forgiveness.
Right.
Yeah.
Which leads to the question, if I have 5 kids, which can I apply? Can I choose who I apply to? Can I choose which loan I get to apply to? These are things that
Yeah,
are
obviously.
still out.
Yeah.
They pulled this together. It's typical of the government to throw something together and then ask questions later.
Yeah.
Okay, that's our government at work. Government work in the same sentence. Oxymoron kind of thing, sorry. How long is this process going to take? I mean, I've read that, you get the application in.
Yeah. It's going to, as we stated before, it's going to be quicker for those that are already on the income driven, and then it could be anywhere from 6 months, maybe even more for those that have to apply.
Right,
So,
which means that the poor loan service providers are going to be getting calls
yeah,
constantly.
they're already getting calls out the
Right,
wazoo.
of course. All right, what else we got here? Good question. What are the tax implications of this loan forgiveness?
So in 2021, Biden signed the American Rescue Plan. That made all debt forgiveness tax-free at the federal level. Now, with that in mind, there are currently 13 states that don't conform to this. Pennsylvania, New York, West Virginia, just to name a few. I believe there's 13 total. So those states aren't currently conforming to that. So in those particular states, it could potentially be taxable on the state level, of course. Now, keep in mind the states do have the opportunity to change this, so it's not set in stone, but it's just something to keep in mind.
Right, and for those who are business owners, this sounds a lot like the PPP program. So with the federal government in 2020, when they were giving COVID money to business owners, they were giving them as loans later to find out that they didn't have to repay the loans, and then later to find out that they didn't have to take it as ordinary income. Now, typically, prior to the American Rescue Act, what happens is that, this happened if you had short selling a home or other type of debt forgiveness. If they forgave 20 grand in debt, great, you're off the hook. However, you get a 1099 for 20 grand. So you have to pay taxes on it. But what we're saying here is with the American Rescue Act, they made it so that it's not taxable at the federal level, and then it's up to the state. There are 13 states who don't conform with the federal government. Pennsylvania, New York, West Virginia, Virginia being a couple of them on the East Coast. They still have the ability to say, all right, we're not going to tax it, but we still don't know.
It's up in the air.
Right. But I would rather pay tax on 10 grand
Then pay 10
than
grand.
10 grand.
Yeah.
Just saying. Okay.
Especially the state tax. It's not that
Yeah.
bad.
I know, that's right. Pennsylvania, it's 3%. Okay, what about parents who've taken out the Parent Plus loan? We just talked about that a few minutes ago. Are both students and parents eligible? We talked about that
Yep.
also a few minutes ago.
As long as they're separate loans, they're both eligible.
Right. Okay. And then are graduate student loans eligible? Yes.
Yep.
Okay.
But you can't, again, it's per borrower, so you can't get 10 off your undergrad and 10 off your graduate loans.
Right, it's
Yeah.
per borrower. Exactly. Oh, I tell you what, we did a pretty good job answering most of these questions. And what if I made payments during the COVID-19 pause, well, you can get the repayment for
Yep.
that.
Potentially.
Potentially.
Yeah.
Thank you. What about student loans in default? Do they qualify for forgiveness?
They actually do qualify. So if you haven't been able to make payments prior to the pause and your loans are in default, they actually do qualify. So once again, based on your income, but they do in fact qualify.
Okay, that's pretty amazing. What year will they be basing it on? They're basing it on 2020.
One other
2021.
Or 2021.
Right.
2021. One other thing that I wanted to clarify too was with the Pell Grant recipient, we didn't really cover this, was if you received the Pell Grant one time, if you got a partial Pell Grant, you're eligible for the $20,000. You didn't have to receive it, every semester. If you got it once, you're eligible for the full $20,000 relief. And another thing too is if you have $6,000 of student loan debt, and you're thinking, they're going to forgive $6,000, I'm going to get $4,000. They only forgive up to what you have to.
Yeah, right. Wouldn't that be?
I heard someone
$4,000.
ask me, they're like, I only have $5,000. Do I get $5,000? Like, no, sorry.
Yeah, wouldn't that be a nice thing? So, what other things on this topic? So there was the number one. So the deferment, they extended.
For a final time through December 31st.
Right, it's final until the next time, right?
Well,
Yeah.
Well, no, I'm sorry. That's because the elections are over. I'm not talking politics here. Promise. I lied. All right. So anyway, so that was it. The second item we talked about, you had the student loan forgiveness. What was the second?
They made it more manageable. They extended the public service loan forgiveness program, and they extended the debt repayment or the repayment structure for
The
the
income-driven.
income-driven repayment plans. Yeah.
Right.
Which, for what it's worth, if you're not going to have it, if you have a sizable loan and you're not, if you won't qualify for loan forgiveness completely through the PSLF program or other means, the income-driven plan, if you have the means, I know personally, I'm on the income-driven plan. The first 2 years are interest only. So you're
Are
not
you suggesting that I'm not paying you enough money?
Yes. No, but you can get yourself into a trap. Paying very little on your loan, it sounds really nice, because a lot of people can only afford so much, but just always know that if, you don't want to just let this thing crater out of control. Snowball out of control.
Without a doubt. One of the things we talked about were debt repayment programs. Okay, I say programs, strategies, it's probably the better word, is what you're talking about are more defined by the government, which I personally think makes sense. I think, what is it? Once you graduate, you're automatically in deferment for 6 months, correct?
Yep.
Yep.
get a grace
And that's
period.
all loan, private and government?
Not sure
private.
about private,
No.
but government.
But government, okay.
Yeah.
So the fact that they have this type of program, I think makes sense. I mean, you think about it. You're graduating from college, you haven't really jumped into your career yet. And
yeah.
it takes time to get involved in your career. You got costs and everything else. I think it makes sense, and I really like the concept of that program. But again, if you're only paying, call it minimal payments, you run the risk of effectively not paying down your loans anytime soon. Now, how long does that income-driven thing go?
They can go, the one I was on was 25 years.
25 years.
That's exactly, because you got 2 to 5 years of paying interest only, which makes, I'm only paying $100, $200, right? That's great. Well, that's because you're not even taking your balance down. You're just
Right.
maintaining it.
Right.
So, and then the next couple of years you pay a little bit more principal and a little bit more, but it's just
What
a
if your
ballooning
income
issue.
never, are you always going to have these student loans going on in perpetuity?
No, because what they do is they have the first couple of years are interest only, but then they start tackling principal.
Okay.
So they increase the percentage of your required payment.
Over time.
Over
Even
time.
if you're now all of
Even
a
if your
sudden
income doesn't
arguing,
change.
okay,
Yep.
so then you shouldn't have gone to college. And by the way, this also applies to students who didn't graduate.
This
And I know
applies to students who didn't graduate. This applies to trade school. This applies to, if you have a federal student loan, it applies to you.
Right.
And that
That's-
can apply to a lot of different things.
So we talked also about strategies of paying off loans. And there's a lot of different strategies out there, but I know one thing that we have referenced as far as parents paying loans. Okay, with a Parent Plus loan, is the student also named on the loan?
No, I don't believe
I don't believe
I don't
so.
know 100%, but I don't believe it's a parent's loan.
It's a parent's
Yes.
loan. So one of the other things that I've also talked about, particularly with the unsubsidized loans, even though a student is in college, I always encourage, if the parents, a lot of times parents get the loans with the intent of still paying them off. And even if they're not, I still encourage the parents to make minimal loan payments along the way while they're still in school, because it's on the child's debt.
Yep.
And what happens is that the child graduates from college, and all of a sudden, they've got all these loans that have been paid. That gives them really, really good credit.
Yep.
And so we encourage that type of program, if the parents were planning on paying it, to be paying off these loans to help create favorable credit scores for the kids.
Yeah.
Then the other thing is that loan consolidation has its advantages and disadvantages. And I've seen folks coming in with 10 loans. It happens a lot.
Yeah.
8 loans, 1 per semester for
Yep.
4 years.
Exactly.
Okay, so they have all these loans, and they say, I don't want to have 8 loans. Let me just consolidate them into one payment. On the surface, it sounds like it makes a lot of sense. However, it's like a mortgage. If you have a $1,000 a month mortgage payment for 30 years, and you decide to pay $5,000 this month, how much is your payment next month?
$1,000.
$1,000. Right. Okay. So that doesn't help you. What we generally will recommend is you had a couple names for it: Avalanche and what?
Snowball.
Snowball.
Those are the 2 common debt repayment strategies, just for general, not just for student loans. The snowball is where you start with your lowest balance, pay that off, then you move up to your next lowest balance, and so on and so on. The avalanche is where you tackle your highest interest rate first and then work your way down.
Right. Okay. So both of them make sense,
Yeah.
and I always try to combine the two. I never knew they had names to it.
Yeah.
If you have one of your smaller loans with a high interest rate, I always suggest tackling that first, because what that does is, if I had 8 loans on the books, and let's say for instance there were 200, 150, 100, and all these different loan balances, or at least loan payments. What happens is, if you pay one of them off, that is off the books, and it effectively reduces your minimum monthly payment.
Yep.
Well, okay, great. You can look at it from 2 perspectives. One perspective is, if my minimum payment went from $850 to $800, okay, well, how much is that really going to help? But if I have a tight month, at least it's $50 less.
Yeah.
But more importantly is, if you are applying for any type of credit, then what it does is they look at your income. And if they look at your income and they look at your expenses are your student loans. And if you can pick a few of them off as you go along, not to mention the,
Yeah.
it's almost like the mortgage burning ceremony.
Yep.
You pick one off and it makes you feel good. So anyway, that's about all we got. Is there anything you want to add that you think is important on this topic?
Covered a lot.
I think it's just important to remember that it's all very premature at this point. So just
Right.
things can change. Keep that in mind, and that's the important thing to remember.
Great. Well, guys, thanks a lot. I know for your sake, I hope that that these things pass. For my sake, who's paying the bill, I'm not sure that I'm excited about it, but that's a separate issue. But anyway, so we deal with this all the time. It's a very important component of whether it be the parents or the students graduating from college. It's a very important financial issue. And right now, it's in question. But one of the things that we would encourage is, get your arms around what you got going on. Okay, don't bury your head in the sand. Know what you've got for your student loans, know who's providing them, and get your arms around it, because here's a way of getting free money, so to speak, and that's all I can say. Now, one thing we would also encourage, if you do have any questions, certainly you can call your loan providers, but if you'd like to give us a call, you're welcome to call us as well. We're more than happy to provide you with assistance. So thank you guys for being on the show today and providing your input. And thank you for joining us. I appreciate you taking the time to view our show. I certainly hope that you learned something about this new program that's coming out. And we'll see you next week. Thank you very much. Have a great day and have a great week.